time. It is Sunday, September 11th. And if you are a member of the Gen X, baby boomer, even millennial generation, September 11th is one of those days that you will likely never forget. I still remember exactly where I was and what I was doing on that tragic day. And what I want to do here before we get started with the daily financial news is I just want to take a moment of silence to remember all of those that we lost on September 11th on that horrible day. So 1 second. All right, so September 11th, Sunday, September 11th, a lot of stuff going on today, a lot of stuff for us to talk about. First and foremost, where should we start? You know what? Let's start in the middle. I don't think we've started in the middle before. So let's talk about CPI over under. If you don't know, the big number for next week will come out on Tuesday. It is the last inflation reading before the Fed makes their decision on the 21st of September. Again, it is widely expected that the Federal Reserve, at least currently, will raise 75 basis points. The futures market has it at 88%, with the other 12% going to a 50% move. So there is no question on Wall Street that we will be getting a rate increase on the 21st. It is basically 90-10. Will it be 75 or 25? Tuesday morning could be market moving. I will give you my wild ass guess, and I would love to hear from you. As you've heard me talk about the last 2 or 3 weeks, I believe lurking in the background is something that nobody is talking about. What do I mean by that? There has been so much focus on headline inflation, and correctly so. We peaked at 9.1. I believe the last reading was 8.5. As you will see on the board, the current forecast is 8.1%. So again, we have a trend forming. We are already potentially down 1% on headline inflation. Lurking in the background, in something I am wickedly concerned about, but most people are missing, is core. Core inflation is proving to be sticky, and sticky equals problematic. Headline inflation will go down. Gas is down, 80, 90, 100 days in a row. Folks, that's one thing. And yes, it is down impressively. And a lot of folks, and I suspect a lot of folks on Wall Street will be saying and cheering an 8.1, an 8, a 7.9. But if core stays flat again or goes up, that is a lurking problem that I want you to recognize because no one else is talking about it. If we print 6.1 or above, that will actually have CPI core going up. I believe last month's reading was 5.9%. So let's talk about this. Let's play over under. Let's play complete amateur guessing game because I find it fun. So right now, the experts, the talking heads are calling 8.1. Again, we were 8.5 last time. An 8.1 would be an impressive drop. I'm actually going to call the under. I'm going to call the under, and I'm going to guess 8%. I'm actually going to write it on the board over here so I remember on Tuesday. All right, so that's headline. Now let's look at core. Again, I think core is a problem. I believe last month was 5.9. I think core goes up to 6. No, You know what? I'm going to call it 6.2. Just for fun, 6.2. Let me write that down. 6.2. Okay. So those are my wild ass guesses. Let me know about yours. We should have the answer Tuesday morning for our daily financial news. And again, now let's play this out. This is why it is so important. If I am right with my wild ass guess that headline is down more than expected, but core is up more than expected, I believe the knee-jerk reaction in the morning on Tuesday will be stocks to the moon, because they have forgotten how sticky core is. I don't know. It could be dangerous. Now, if both come in lower, you have a trend forming. We will see what happens. But again, I would argue that even at 8% headline inflation, that is still a long way away from 2%. So we will see what happens. Tuesday's number is going to be a big, big number. Let's talk about this housing market freeze. Again, I believe we are about to see a winter of crickets, of just full-blown tundra, frozen, bad, no transactions. I've done some research and I've read some articles about the housing market. Did you know? And I did not know this. This is a fact about the housing market that I did not know. It is estimated that 51% of a normal month, and again, we are not in a normal times, but 51% of a normal market is the move-up buyer. Think about that. And the move-up buyer is important not only for the housing market, but for my thesis of a housing crash in transactions. The move-up buyer, or 51% of transactions in a normal market, sell one, buy one. That's why it is going to be such a winter. Did you know that it is estimated 64% of existing homeowners were reluctant to sell their home and buy another one at 5% mortgages? It is estimated, when you do the math, right, 64 times 51, that 33% of total transactions are not going to happen when rates are 5%. If you take rates to 6%, which we are at now, it is estimated that 43% of move-up buyers don't move. Again, 43% meaning they don't sell and they don't buy. Housing transaction crash, winter is here, all of this stuff. But again, let's not forget, I do not believe that 6% is the peak. So if we lost 6%, or I'm sorry, if we lost 43% of transactions at 6%, what do we lose at 7%? And as we talked about yesterday, again, using the same ratios, we might see 8%. How much of the move-up buyer just goes, sorry, not moving? I believe lots and lots. This winter, I believe a lot of people, I would even say most people that didn't sell in the summer, they're going to sit back and go, you know what, honey? It's not the time to sell. Let's take our listing down. Let's wait for the spring selling season. We don't want to be that couple who sells in the winter. I see inventory falling as rates rise, as affordability crashes. It is going to be demand destruction and supply destruction like we haven't seen before. So pretty crazy. So again, home buyers to pause because affordability gets worse. Home sellers not listing because they can't buy somewhere else or they're not getting their price. It is going to be an epic disconnect between buyers and sellers. It's going to be a really rough winter if you're a real estate agent or a mortgage broker. So we've talked about lots of different markets: Vegas, Sacramento, Miami. I just got some data on the Hamptons. The Hamptons, yes. Lots of stuff I didn't know about the Hamptons. Did you know? I did not. That the median home price in Hamptons is $3 million. Yeah, that's some good living. $3 million. Did you know that average days on market in the Hamptons is 111 days? I had no idea. 111 days. There currently are 720 homes for sale in the Hamptons. That is down 3%. Even the Hamptons has less inventory year on year. There were only 48 sales in the month of August. That is a crash of 40%. Even the wealthy of the wealthy, the wealthy that don't need loans are not buying. I hear all the time, Michael, cash buyers will just keep it going. Well, the Hamptons would argue that delta. I'm going to suspect that most homes in the Hamptons don't have debt on them. So they saw a 40% crash in the month of August. And again, the month of August is a good month for home sales. Not to mention 48 closings, but signed contracts, aka pending, was down 46%. So again, the top of the top markets are struggling. Other markets are struggling. We are seeing a transaction crash like 1981 and 82. 50% is coming. So we've already done CPI. Let's talk about the week ahead. Lots of stuff coming out next week that we will be important. And again, next week is the last set of economic data that the Fed will consume before they give us 75 or 50 basis points. On Monday, big report. What is the 3-year inflation expectation? We have actually seen inflation expectation crash. I don't know about you, but I am not seeing selfies or pictures saying, I did that on gas pumps anymore. That has been fixed. There is a lot less social media uproar about gas prices. So inflation expectations because of gas prices have crashed. And again, that is good. No, that is great news for the Fed. If you heard Jerome Powell in that Jackson Hole meeting, he doesn't want inflation expectations to take hold. As we keep going, folks, remember, like, subscribe, comment, be a part of the One Rental at a Time family. And as Dion likes to say, every time you hit the thumbs up, an angel gets its wings. So far, we have 27 new sets of angel wings. Again, like, subscribe, comment, become part of the One Rental at a Time family. Tuesday is the big number. Tuesday is the big number. What is going to happen with inflation? Is headline still trending down? I have said yes. Let me know your guess. Again, I believe the most important number will actually not be talked about, and that is core inflation. We will not hear core talked about because the talking heads will be enamored with peak inflation. Inflation's down. Kathy Wood will say, deflation is coming. Pivot. Stop beating up my stocks, Mr. Powell. All while core inflation is sticky or, heaven's sakes, rising. It could be an interesting dichotomy on Tuesday. Wednesday, not to be outdone, if Tuesday is CPI, you know that Wednesday is PPI, Producer Price Index. Think wholesale prices. I believe PPI peaked at 11.2%. I believe last reading was in the 9s. I did not write it down, but we do get PPI inflation on Wednesday. Thursday, we will get jobless claims. Jobless claims is a weekly number. It has been trending down. Again, remember, sometimes good news is bad news. A strong job market goes against what Powell is trying to do. We get retail sales. I think retail sales will be a very important number because if you've been watching my daily financial news, you know that most retailers have reported disappointing forecasts with some missing top and bottom line. Are we still shopping till we're dropping? Knowing the American consumer? Probably. Retail sales will be important. And then finally, Friday, consumer sentiment. Consumer sentiment appears to have bottomed right when gas prices peaked. So again, if the theme carries, gas prices are down, consumer sentiment will go up. That's just what we have going on. Prices and rent spikes. I don't know if you guys saw this report, but I got some numbers about the top 5 appreciating markets 2020 to 2022, and also rent increases 2020 to 2022. Cape Coral, Florida, up 72% in 2 years. Wow. 2 years. Woo. Austin, Texas, 69% in 2 years. Folks, if you have property in Austin, Texas, tell me about your property taxes. Property taxes have to be going up and probably messing with your cash flow. Yeah, that could hurt. Boise, 67%. Phoenix, 62%. And Dallas, Texas, 56%. If you invest in any of these markets, congratulations. You have had a couple of wonderful, wonderful years. How about rents? Well, Miami, Florida takes the cake at 46% increase. Wow. 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 46%. Orlando, Florida, 28%. Still impressive, but not 46% impressive. Wow. San Diego, California, 23%. Austin, Texas, 22%. Nashville, 20%. And even Las Vegas, Nevada. I was really surprised to see Las Vegas on this list, up 20%. Crazy times. Last point, household wealth collapsed. Don't know if you saw this report, but apparently household wealth collapsed at a record number. If I was a fearmonger, I would have in my title, household wealth collapses at record rate. But I didn't do that. Household wealth collapsed from 149.9 trillion, that's with a T as in Tom, to $143.8 trillion. How is that generally made up? Stocks values, your stock portfolios dropped 7.7 trillion, while gains in real estate were up 1.4 trillion. These are Q2 numbers. So again, a record drop in household wealth, down $6.1 trillion. Pretty crazy stuff. Still, 143.8 trillion for the collective American household. So again, it is Sunday, September 11th. September 11th is just one of those days that most of us will always remember. Do yourself a favor, take a moment, remember, and then remember that tomorrow is not promised to anyone. Live life. Remember the Dolly Parton quote, which I assume I'm going to mess up. Basically, don't get so busy that you forget to live. Something like that. She said it much better. But again, folks, I want you to have an amazing day. We have a lot of stuff going on today. We've got Cade Barrett coming on talking about his Facebook post. I have a private one-on-one mentor session. Then we've got Jason Pritchard and Dan Bird talking about stocks. It's going to be an awesome day. I hope you have an awesome day. Take care.